evening, everyone. Welcome to my program, The Key to Diversifications. My name is Mandy Chen, head of IQI International Sales. Just a little bit background of myself. I've been involved in international marketing for more than 7 years. And myself as an investor, I've invested a few properties in different countries for the past few years. So the program is to design for those who are keen to explore in international properties, or they wish to diversify their investment portfolio by hedging against the currency, and yet they do not know how to go about it. Perhaps this is the major concerns that most of the investors are facing. Okay, in this program, we will give you some fundamental guidelines and investment criteria how to invest abroad. Besides, we are actually giving some global market informations in the respective countries just for you to have a better understanding how to invest in overseas properties. By end of this program, you'll be surprised that some of the countries, in fact, the investment policies are rather friendly and it's very minimum entry cost for a foreigner. Our program will run every day, 8 p.m. Malaysia time, GMT +8. So please mark your calendar and join us every night, 8 p.m. So in our program, we actually invited quite a number of panel speakers, and majority of them, they are qualified professional real estate specialists, and some of them are from our global IQI team. They are investors as well, and they are willing to share some of their knowledge and experience to guide you through your property diversifications. So today we have a very special guest, okay, two guests from Benham and Ribs, okay, and they'll be sharing the UK potentials with us, okay. The company has been in the market for more than 60 years, and they have 20 over branches all across in London. Okay, let's welcome Melvin, the country managers of Benham and Ribs, and Mark, the director of Benham and Ribs. So I will let Melvin to introduce yourself to the audience.
All right, thank you, Mandy, for having us, and thank you, IQI, for having providing this platform to us to speak today. Very quickly, I'm Melvin. I run the Malaysia office, the business for Benham and Reeves, and currently we are a end-to-end solutions provider for properties in London, from acquisition, sales to lettings to furnishing, anything to do with your tax as well. We assist, so it's A to Z. Even if you want advice of your current properties in London, or if you need advice on where to invest, we are more than happy to have a cup of coffee with you. And today we manage about 200 over landlords in Malaysia, or 200 over properties, or 200 over landlords in Malaysia. And hopefully it goes better for us in these trying times. And we are currently also managing all their queries and their questions and some of the concerns that they have. And that's why we are here today. And that's why I brought my lettings and also my lettings director and also my director from Benham and Reeves, Mr. Mark von Grunha. Mark has over 20 years of experience in the real estate market in London, very, very experienced. He writes on many of the press in London, press releases. He also deals with and advises many properties and developers, and work closely with all these developers as well. So I think we should welcome Mark. He's spending time with us today. And Mark, you'd like to say a few words?
Thank you very much. Thank you, Melvin, for that lovely intro. Yes, my name is Mark von Grunha. I have been working in the business for over 20 years, in fact, 25 years. Yeah, I'm based in London. I do come to KL quite a lot. We have a lot of Malaysian clients. And, you know, the difference with us over everybody else, and I say that me personally, but us as a business, is we offer that personal approach. So people can always take my mobile number, my email, and clients all over, they email with questions. I'm always happy to give free, independent advice to try and help. Obviously property related. I can't help with divorces or anything like that. But, as long as it's property related, and when I say property related, I do mean London property and not Mongolia or Penang or anything like that. It's London property. So yeah, we're here, and Melvin's obviously in KL. But I'm in London, so happy to help with any questions anybody has. And very pleased to be here today, and thank you very much to Mandy and IQI.
Okay, that's great. Okay, for those that you love our program or just join in, can you just comment, give us a like, okay? Then we will share more relates to the potential of the UK. All right, so remember today we are actually giving out reports, okay? So for those who wants to report from Mark, okay? So please comment report. I will get my team to contact you and we will send you the report. Remember to like our page and to like our program. You will be able to receive this report for free. All right. So as an investor, is this the best time right now or ideal time to invest in London with all these not so uncertain situations happening right now? Melvin?
Would like to go first? Okay. So if we look at the current situation in London, and as I spoke briefly last week or 2 weeks back for those who have joined, you are seeing great bargains in London now, properties. And like I said, we can't have a crystal ball to look what will happen in the near future. Of course, there's a lot of uncertainties, but we can look back at history and what happened. 1820, we had the plague. 1920, we had the Spanish flu. And now, of course, 2020, we have this current situation now. And London is a very resilient city. It's been through all that. It's been through a Great World War. It's been through multiple financial crises, and it's still one of the very safest places for individuals or people to put their money. So yes, if you can find the correct bargains and do a little bit of research now, developers are willing to talk more on deals now. So yes, it's a fantastic time to look at properties, and you'll be surprised that most of the major institutions or investment companies like the Norwegian Investment Fund, Citibank, Bloomberg, all these people bought their buildings during Brexit when prices were a little bit low. So now it's another golden opportunity. And that's what Mark is also having a talk tomorrow with Bharat Homes. And we're going to touch a little bit about this as well. So yes, if you have the spare cash to put in and looking at FD rates and all that, it's an all-time low now in terms of cash rates, in terms of fixed deposit rates. Yes, we would say our position would be yes, it's a good time, but look at financially strong developers or look at completed properties that you can make a bargain on and put an offer. So in London, it's offer and acceptance. You can just throw an offer, and if the vendor accepts, then it's great. So it's entirely up to you. Yeah. Mark, you'd like to add a little bit more?
I totally agree with Melvin. Obviously, it's a challenging time, what's going on, but it's a global pandemic. This is definitely the time of opportunity. It is a great time to invest. You know, Melvin didn't touched on one of them, which is low interest rates and discounts from developers, but we also have very strong rental demand in London, and the pound is incredibly cheap. It's on average 30% cheaper than it was in 2014, 6 years ago. And you're going to get in, if you buy now, while there's a crisis going on, you're going to get in ahead of all those people that are waiting to buy. Because people in uncertainty, they always sit back and they wait. So if you do it now, you're going to get in ahead of them. And the one Melvin didn't mention is SARS. And the reason I mentioned SARS is because everybody in Asia, you ask, when's the best time to buy? And everyone says, gosh, I wish I bought during SARS. Or they say, oh, I bought during SARS. It's the best investment I ever made. That was a major crisis. And I think this is different from SARS, notwithstanding it's different. But you buy during crisis, you come out. And you know, you look at previous crises, which Melvin talked about, or you look at the most recent 1998 and 2008, the London market bounces back, and it's with strong growth. So I'd say yes as a short answer.
Yep. Thanks for the great information. Let's say, for example, currently, if I were to own a properties in London, should I be worried about tenants not being able to pay the rent? What is the situations right now? Or is it possible that such things happen? And as a landlord, what are our rights in this case? Mark? Do you want to?
Well, thank you very much. A lovely question. So look, as I said, it is a challenging time, and there are lots of challenges right now for people with their jobs. So, but this is going to be short-lived. But there are many tenants out there who do not work for a large company. So most of our tenants are corporates. So there's no issue with those. Japanese companies, American companies, there's going to be no problem with those. But some individuals are going to have problems. They might have lost their jobs, or they might have done a government retention scheme, or their partner may not be working, and they are going to have problems paying. So what I say to every single landlord, because we have had a few who've had issues, is be empathetic, be fair and reasonable. There's no point if someone doesn't have any money, there's no point forcing them. So you try to agree something that's good for you as the landlord that may work for the tenant. So try a reduction. If they've lost their job, or if they haven't lost their job but they're on the furlough scheme, then they've had 20% drop in their income. So maybe agree to, I know it's horrible to take a drop, but it's only temporary, and you'd rather have something than nothing. So we've seen landlords offer anywhere from 20 to 50% discounts, where it's really important. If you've had a good tenant for 5 years and they're coming to you after 5 years being good payers, it's nice to give something back to help them. You can obviously try to defer it and say they pay a discount now and pay the rest later when their jobs get back on, or agree a discount. But we try very hard on these situations to help landlords get through it. You need to be empathetic. That's the most important thing. Now, one warning, I'm going to turn to if everything does go wrong in a second. One warning is short let providers. So that's people that rent properties and let them through Airbnb or anything like that. Those companies are totally finished at the moment. There are no short-term travelers. There are no people on short-term assignments in London. These people won't be able to pay. If that's the case, my advice, and I have one property, well, we as a business had one property around, it's just give me the keys back today. Don't worry about the rent and just leave. I'd rather get my property back. So if all comes to the end and the tenant can't pay and they say, I can't afford to, then the best thing is to say, leave and give me the keys. If sadly they don't leave and give you the keys and they say, no, you are going to have to evict them. And it is, the government have allowed 3 months in order to help this situation. I know it's a long time, 3 months. That's the notice period, and then you've got to go to court. But it's short-lived. You know, when you own an investment property, it should be a long-term investment. You know, 10 years is the target time, I say to people, 5 as the minimum. If you're owning that time and you have 3 to 6 months of a problem, it's not the end of the world. I know it hurts short-term, but the long-term view is it will come right in the end. The other thing, just to add on that, is UK banks, the government forced UK banks to offer mortgage holidays for buy-to-let landlords. So if you've got a loan through a UK bank, then you can go to them and ask them for a 3-month holiday. But as I said, this is short-lived. It sounds awful because we're right in the middle of it. But actually, you've just got to try to see past the negativity going on at the moment and move past that. But as I said, most tenants are paying the rent and most tenants are very decent and will work with you. Anything you've got to add, Melvin?
Yeah, from our Malaysia side, we have about 200 landlords, and it's less than 20 of these landlords, I just want to add on, that have their tenants absconded or asked for discounts. So at Benham & Reeves, I stay up till, now there's nothing to do, I stay up to 9, 10, 11, 12, monitoring the emails and hoping there's no emails coming in that tenants are asking for discount. And but it is something, the element of care, I think that's very important from the agents, and we have all our area managers, our branch managers scouring the market. Don't quote us, but we are still doing things that are helping the landlord in many ways in securing tenants. Yeah, but this is what we are seeing. So it's very resilient, and none of our landlords are panic selling, because most of the properties there, like I said, since my first talk with you guys, is equity backed, meaning the landlords who buy, they probably have funds to pay cash. They take 50% loan, so they're not really worried about panic selling and not being able to pay their loan. So touch wood, most Malaysian landlords have been pretty compassionate, and the tenants stay us on. Yeah. So I'm relieved that my landlords are at such a situation now, but we are still in the early days. So we are monitoring, and we can only manage and monitor. Yeah.
Yep. At the end of the day, we want to create a win-win situations for everyone, right?
Absolutely.
Okay, for those that who just joined in, so welcome to our program, The Key to Diversification, episode 9. So today we are talking about London markets. So for those that who have any questions for Mark or for Melvin, so please comment in the question box there, and we will pick up your question probably later. Okay, if you have any questions, feel free to ask. We will be trying to answer your questions later. All right, so again, we will have freebies to you all. So for those who just joined us, so please like our program, okay, and comment report. We will send you a report all the way from London, and it's actually from Mark. All right, so if you wish to have the report, so please comment on the report. My team will actually contact you and send you the reports. Okay. All right, so I understand that the property price actually fall further. Will the property price fall further in London? I think in Malaysia, I think last week there's an article saying that the Malaysia property price will fall 70%. So all the agents will say that, okay, if the price were to fall up to 70%, we will definitely the first one to buy. So I don't think that will happen in Malaysia. Then what about in London?
Yeah, so I can take that first. Yes, everyone was saying this. Everyone was saying this during Brexit. Everyone is saying this now. The only issue is that to say that it will fall that much if there's no pent-up demand. And number one, if you look at properties in London, and I've shared this earlier as well, there's a lot of pent-up demand. Reason being, you can't really build high in London because of restrictions. Council is strict, because of certain heritage laws.
Yep.
And if you look at properties at circa £700 per square foot, £600 per square foot, those are the ones that the community really needs,
Yeah.
So, and housing is more important than ever now. You can't spend the coal in COVID in the coal, So what we are seeing is that, yes, there's inactivity now that might cause transactions to drop, hence property prices might drop a little bit. But I foresee, and it's very interesting because we work with Barclay Homes closely, and the Singapore office just told me that China, they did a 28 unit deal for one person. So, so once China picks up, there's a lot of Chinese money coming into London these days as well. As you know, all the buildings are bought by them. Huawei has invested in the Imperial College's research arm, Oxford's research arm. So it's coming in a big way. And we are seeing now it's just a traffic block, but I think once the surge or the floodgates, the floodgate open, we will see a surge. But for now, you must take advantage of the inactivity to get a good bargain, negotiate hard, and developers will agree, to a certain extent, yes. Mark, you'd like to add on?
Yeah, I agree. I mean, to be fair, I don't think there's going to be any drop in value at all. We have a total, the market's like in suspended animation. We're on hold. That's the way you've got to look at it. There are very, very few transactions. But that does not mean because prices are too high. Prices and transactions are sometimes linked, but right at the moment they are not. Transactions can't happen because people can't go and do physical viewings. Even if they want to buy a property, they can't get a valuation done. Their lawyers are working from home. The banks are slow. Everything is slowed down. So the drop in transactions is what that hold has nothing to do with sales values. If you look at what was happening before Brexit, before the COVID struck, we saw increase in values. Last year had strong increase in values. March had the highest increase in values for the last 5 years. And the market was springing back into action, the London market. So because of the virus does not mean things are going to drop off a cliff. The only time or the only place where I think you're going to see, Melvin used the bargain word and I love it too, is discounts, my favorite word, discounts coming from developers. So the double Ds, because developers are offering discounts now because they have stock that is built and is there ready for people to move into. It's not like my home that I need to move. I'm living in it, so I don't need to move out. Whereas a developer has the asset sitting there, they need to get money. So they will they are doing discounts now. And as Melvin said, China, I heard that did a big, large multi-transaction. I'm hearing transactions all over London where there are amazing deals to be had. You know, not half price or 70% off, but decent discounts that you don't see except at times of crisis. So I was saying right now, I don't see any, I have no forecast of drop in values. And I don't think anybody's saying, even the press and the media are the worst at saying, you know, like you said, Malaysia's going to drop 70%. London's going to be free. Yeah. Of course not. The press will say that. Media says that to sell newspapers and get you to read the papers. That is not always an actual reflection. And I'm sitting in London and I'm not seeing it. We're seeing the sales that we're seeing are all off plan, new sales, that the deals that we're doing have got decent discounts. And this is not a seller's market. If you are a forced seller, then you're always going to do. But as I said, my forecast is there isn't going to be a big drop.
Yep. Great. Thanks a lot for the information. I guess sometimes it's like investor will just look at the articles, the news that they are talking about all the negative stuff that which make them lost confidence on investing abroad. So sometimes you got to be very selective and always listen to the experts or the locals and do a little bit on the research. Then you will realize that actually it's not that bad after all. Yep, that's great. So since your company has been in the market for so many years and you have been handling so many tenants, okay, the property management and all these things. So any process that I, as an investor, as a landlord, should be aware of when we are acquiring a tenant?
So, Mark, go ahead. I mean, the key thing about if you're letting a property is that the tenant is the person that makes your investment work. Doesn't matter how much you pay at the bank. It doesn't matter what everybody else working around it, who the developer is. All of that is important. But the person that makes your investment work is the person who's living there, looking after your property or not, as the case might be, and paying you your rent. This is the most important person. So I say the thing that you must do is check out the offer in its entirety from a tenant. So once you've got an offer, who is the tenant? Not just are they male or female and where do they come from? You're not, you know, I'm not interested in that. I want to know, what do they do? You know, how long have they been doing it? How long are they going to be staying in the property for? And also really important, when do they want to move? Because I can have someone from Goldman Sachs wanting to move in December today. Great, he's a good tenant, but moving in 8 months' time, that's not interesting. Yep. If I have a good tenant who wants to move in on Saturday, and he's paying, the rent is important, but the tenant himself is much more important and when he's going to move than the rent. Because if he stops paying rent or makes lots of damage, these things cost money. So I say, look at check the offer out in its entirety, who the tenant is, how long, how much they're going to pay, who's going to live there. And then the next thing that links with that is referencing. That's really key. Check out, you know, we don't do it ourselves. Many agents do it themselves. But to be fair, I'm an agent. I'm not someone who's going to check through credit references and things like that. You want a professional to do that. So we check their credit record. We check their passports. We check their bank statements. Our company does all of that in-depth checking to make sure that they're good tenant. And why is that important? Because we have very, very, very low default rates. I mean, incredibly low. Because we do a lot of research at the beginning to make sure that you have a good tenant. I would always say to our clients, and Melvin knows that, is we say to our clients, wherever they are, you know, if I've got an offer and you've got an offer from another agent, if you've gone elsewhere and your offer is better, take that. Because this is a long-term relationship and the tenant is most important. Yep. Melvin, if you've got anything from the Malaysian landlord's perspective.
No, I think what Mark's saying is correct. And for us, it's not just about the deal, and there's a high element of care. And I always use the word cares because we do reject offers at the behest of us because we want to do deals, we're agents. But if the report comes in funny, whether the tenant's passports are not right, or you'll be surprised there's plagiarized passports or plagiarized bank statements, then we for sure can't accept them. Yeah. But this is risking us not having or closing the deal, but we will still advise accordingly. That's number one. Number two is that I think, like Mark rightly say, is that you have to be aware of who your tenants are. What do you want to accept? Of course, you can't be as racist as here in Malaysia, where you don't want certain racial groups. But sometimes landlords do tell us privately, and we try our best. Of course, but what we are saying is you got to be fair to the tenant as well. You know, don't continuously strong arm them. Give the tenants a little bit of room to breathe, and the tenants will usually stay on. You know, so these days we are seeing a lot of tech agreements or offers coming in, spanning over 2 to 3 years, and they usually stay on for a long time. And these are good paying tenants. And that's why, touch wood, today I only have, in the middle of a crisis, about out of 200, about 20 units that tenants have sort of absconded or asked for discounts. And we thank that through our stringent referencing process. Yeah.
Great.
And I think I'll add to that. Let me just add to that. If the tenant absconds, we are still letting properties every day. Obviously, I'm not sitting in my office, even though I've got this lovely design behind me. I'm not sitting in my office, even though I feel like I am. But we are working on, our sales staff are going out. They are showing properties. We're doing it virtually. And Melvin's obviously working KL, and our Hong Kong and our overseas teams are working. So if it comes and you get the keys back, we can still let. It's not easy, but we can still let.
All right, great. So actually, especially right now in the markets, there's lots of products that actually going around. Okay, some are hotel suites, some is office suites, some is like student accommodations, some is the pure residential. So what type of investment stock that we should look at it right now? I mean, the best to invest in London, because a lot of people will come to me and tell me that, oh, hotel suite can give me like good rental yield, with probably like rental guarantee for like 5 or 10 years, give me about 8% to 10%. You know what I mean? Or some that will offer like buyback options, or within 10 years we'll buy it back from you at certain cost or whatsoever. So I know that this kind of investment preferences is actually Asians love it. Okay, but what is your view, Melvin?
Number one, we are strongly against such stocks. That's number one. That's been always our position. And reason why, I'll tell you a few reasons. Number one, some of these student accommodations or SOHOs with massive rental guarantees, do they have a proper land title registered? Do you actually own? Is your name actually in the land registry, which we follow a torrent system in which if your name is there, that property is yours, of course. Number two, who are you going to resell it back to if it's not in the land registry and you don't really own anything? You just own a piece of paper with a room. And if it's fine and good, if, for example, Citibank provides me a rental guarantee or buyback guarantee for 10 years, that is good, very good. But if it's ABC company who provides me that, what will happen? Forget 10 years, you know, what will happen within 3 years? So a lot of people are caught within this trap because the rental guarantee will be paid within the first 2 years. Then what happens during the third year? It dries up. The management companies wind up, and there you go. Then you're trapped with an asset that is not working. You don't have you're paying off. It's a liability. You know, you might have taken some money or borrowed some money against it. So sometimes such assets are not very expensive because it's easy entry. They play on the greed of people. So what we have always advocated is proper prime AAA developer products. Yeah, look at sound developers. Yeah, or look at a completed product. Of course, a completed product is already completed. And most of the developments that we sell in London do not have rental guarantees, though we do some. It's because Ben and Reese have been 60 years doing lettings and management. And we want a real economy where that individual, your tenant, is working hard, paying you his salary from his wages, your rent. So then that is a proper working economy. What you're getting in rental guarantees is factored into your purchasing price, and you're taking back your own money to a certain extent, you know. So, and we have met many people who have bought and gotten into such pitfalls. Of course, they met us a bit too late because Mark and Anita, my other director, comes down and we do all these advice clinics. But this is something that we would advise strongly to avoid because the yields are extremely tempting, yeah, but it does not have a good long-term story to it. Yeah, Mark, you'd like to add?
Great.
I agree with that, actually. I mean, I do meet people who've lost money in them. They sound so enticing, but the thing that's ultimately with bricks and mortar, by owning a property, is you can exit and you can leverage. You know, remember, you can buy one of these, you know, hotel rooms, £100,000, but it's cash. And you buy a storage space for £60,000, but it's cash. You can take £100,000, borrowing 60–70%, and you can buy a property for £300,000. I know what I prefer because I can exit, I can sell it. Yes, it's slightly illiquid property, but you can get out. And all these guarantees, they're only worth what the person who is offering that guarantee is worth themselves. If they go bust, which everybody's read about it, these companies, they go bankrupt or you can't find them when you want to sell them, the guarantee is not worth anything. Whereas if you buy a property, it's rented out, you're in control. Even if you don't get on with us, you can go to another agent or deal with it yourself. That's the beauty. I mean, the only thing looking at, forgetting about investment stocks, if you do look at property, then in London, prime central London is the one that most people look at, the Mayfair, Knightsbridge, around Hyde Park, but the yields are very low. So actually, I'm saying to people, if you're looking at property, you go for something blended on the further options, the zones further out, because you'll get a blend of yield as much as 4–5% yield, which is gross, and capital gain as well.
So you're talking about zone 3 to zone 4?
So zone 2 to zone 5. Yeah,
Okay.
Zone 2 to 5.
All right. So based on the current pandemic situations in Europe, so I think it's actually kind of getting bad. Okay. So would you think that there's a property crash happen in London as well? Because this is all the rumors that people keep talking about it. So what is your view, Mark?
I don't think there's going to be a property crash at all. As I said, I mean, we talked about this a couple of points earlier, is there's a drop in transactions because it's on hold, but there is no drop in values. I haven't seen any because there's no deals happening. That's the problem. I mean, so everything's on hold. There's not a drop in prices. You know, once this lockdown ends, things are going to get back to normal really quickly. People need to move. Melvin said that earlier. People need homes, whether it's rental homes or it's a home for them to live in. People that haven't been able to transact now, they will want to transact even more after the lockdown ends. And all those other people that are out there, investors, will also want to jump into the market. I mean, I'll give you, I think this is a really interesting bit of research we did, because we were looking at what China's been up to during the crisis, because I think it's really, really interesting, because China's obviously, they got hit first and they've come out first. So pre-COVID, in December 19, the average number of daily residential sales across 30 top cities in China was 5,760. I mean, oh my gosh, I'd love to do 5,760. 5,760 sales. That's the average 2019. February the 8th, which was their worst day for the virus. The number of deaths and the number of, God help us, but the number of deaths and the number of people. February the 8th, there were only 22 transactions happening. So it went from 5,760 down to 22. 31st of March, the week preceding, that had jumped back up to 5,976. So it's gone from here to above where it was. So what that shows for me is that China is obviously 2 months ahead of us, or the UK anyway. I'm not saying we're going to do the same, because obviously no one can predict that. But all things being equal, if we're on hold, like I'm saying, and like I'm predicting, then the market has to return. And therefore, we predict no drop in prices. There's going to be demand. So actually, I think you're going to see some vendors getting their asking prices without much negotiation when it returns. And so my view is everybody loves talking about crises and bargains and dramatic drops. But the reality is the only area where there is a dramatic drop at the moment is from developers. And as Melvin said, if you get in now and you can do a deal when they're not doing many sales, you will come out with I think with one of the best investments you can get at this time. I mean, it's worth, as Melvin said, London's such a great market. You make an offer, and if they agree, then you pay your money. You don't have to pay something to make the offer. So it's very fluid. But, you know, if you come in and start making offers of 70, 80% off, it's not going to happen. But there are deals there. So that's my view. There's going to be no drop. I mean, my prediction is over the next 5 years, we're going to see 13 to 18% growth over a 5-year period in London house prices.
Great.
Yeah.
Okay.
Yeah, and just to add on, it's real because couple of weeks, last month or 2 weeks back, we just did a couple of deals, and one deal was 24% discount that we got.
Wow.
Previously, the developer will not budge at even 18, 20. Now the purchaser came along, liked it, offered a 24% discount offer with full furnishing, a complete full furnishing of beds, linens, everything. And the developer agreed. And you will never get this kind of agreement in a normal market. And that is why, if you look at the largest developer in London now, which is Berkeley Homes, they bought their land in 2008 when GFC happened. And now they have been land banking, and now they're constructing. And again, they bought it at a low, and when they sold, they're making tons of money. And that's when they bought all their land, you know.
Yeah.
So I think it's just these, like I said, transactions that stop now, but people should not be stopping their momentum in researching, in looking for properties, in knowing, and being still active in the market. I think that's very important. Yeah.
So for those who's looking for best deal right now, I guess don't wait. Okay, start doing some research right now, and this is the best time to get a best deal, like what Melvin and Mark were saying. Okay, a lot of investors will probably want to ask one question. How about, is there any mortgage available right now? I mean, since the situations like this, will the bank stop lending out, or they are still going ahead to lend it to foreigner, especially to Malaysians? Mark?
You want to do the London one first, Mark? I'll do the
Yes.
Malaysian one.
Yeah, sure. So yeah, I'm happy to do that. I mean, I've spoken to lots of banks, and I've spoken to lots of the mortgage brokers we work with. Borrowing, let's be honest, let's start with where borrowing is at the moment. So Bank of England has dropped because of COVID-19. So Bank of England dropped their base rate to 0.1%. That is the lowest ever. But we are in a different situation now to where we were during the financial crisis of 2008. Banks are now fully capitalized. They need to lend. They have to lend to make money. And so therefore they really want to. Rates are the lowest ever. There are rates available from as low as 3%, and loan to value, you can get up to 70%. I mean, we recommend 50 to 60%, but you can get 70%. That's on average, and that's the UK market. So honestly, there's never been a better time to borrow money. I mean, I'm fortunate, one of my flats has just come up and I'm able to do a refinancing at the moment, and it's unbelievable. I'm going to save myself like 25% on the rate, what I've been paying, and this is a fantastic time. And so equally, there are loans available. That's to UK people and to foreigners, but I'll let Melvin do Malaysia because he's the expert.
So the Malaysian banks do loan as well. We have your Maybank, OCBC, CIMB does for certain high net worth individuals. Yeah, but of course the Malaysian banks, their rates are slightly higher. You're looking at anywhere between 3.8% to about 4.6, 4.7% in that margin, depending on how long your tenure is and depending on how much you borrow. But of course, then you have other foreign banks, you have Singapore banks, you have HSBC Expat that we work quite closely with because their interest rate are the most interesting. It's about 2.9%, yeah, and it's little slightly below 3%. So you do get that for properties in London. Yeah, we work with mortgage brokers as well. So getting a loan is not an issue. Primarily, if your client is already wealthy enough to buy a property in London, many a times they would already have their own personal bankers or their relationship managers or their banks providing that loan. But having said that, we have Maybank in London, We have CIMB in London. We have Bank of China. And also OCBC do land in London as well for London properties. Yeah. So you have a multitude of banks which you can do loan shopping on. So loan is not a worry on issue.
All right. Okay. That's very informative information. Anyways, any one of you have any questions to ask, because we are almost towards the end of our program. So if you have any questions to ask right now, we are here to answer your questions. So there's actually one question that's coming up from Lo. He was saying that if once technology happened to affect productivity of time taken of building a property, will property with no more value in future, which means everybody can buy property due to cheap price and easy construction. So what is your view, Mark?
I think I think that will be a very Chinese model where everything is modular. I think that's low. Thank you for your question. Where everything is built stacked and stacked and stacked. That's why they can build the hospital in just a couple of days. But to compare, now we're speaking specifically on London, but to compare London with China would be comparing apple with an orange. Like I said, for London, number one, it won't be fast. Multiple reasons, because you have plannings are very strict. Like I said, you have your strict heritage laws. Most of London from zone 1 to zone 4, the boroughs are only that big. There's a lack of land, unless you want to stay as far as, God knows where, the Midlands or something. You know, everybody wants to buy in, for example, Fitzrovia, Belgravia, Mayfair, or even Notting Hill, etc. But that borough, that particular in Malaysia, what we call that area, it's only that huge. And if you, like I said, if you go to holiday in London, and you will see that it's all low rise, it's all low density. Height restrictions are there. The only high rise, as you can see, it's mainly in Canary Wharf area. Most of the high rise these days, although some are coming up, are mainly commercial. Yeah. So yes, I think for in the near future, if you compare to the China model, yes, where they're just stacking up cities, then yes. But for London, because the specific areas are so tight and demand is still so strong, I don't see that happening in the near future, unless we can wave a magic wand and stacks of properties can be stacked up to, I don't know, how cross from London to Reading. Then I don't think that will happen. I don't think the government will allow it to happen as well.
But I think it's pretty hard, because I understand that from the council of the UK side, they are actually very strict on the
very simple example. We have our local developer IJM. IJM launched their property to sell even before Battersea was built. But because their site was so unique, they bought it on the Royal Mint. They found artifacts beneath it, and because it's on top of a railway line or a tube line, they completed later than Battersea, even though they sold it first. So funny enough, we just took keys last year, you see, when they sold back in 2013. So it took about almost 5 years and a little bit more. So all these construction challenges are still there. To say that technology would just speed up construction, where it's like China, everything is modular, it won't happen in London.
Okay, there's another question that's coming up. As a buyer, do I need to come to London to purchase a property? With the current restrictions in travel, it would be not possible. But if I'm interested, what is the purchase process?
Mark, you want to take this?
Yeah, sure. So no, you don't have to come to London. I'd say 75% of our clients. So Melvin has 200 in Malaysia. We have about 3,000 globally. And I'd say 70% have never even seen their properties. They don't even come. They come to London, but they don't even want to see their properties. They own it as an investment. It's an investment. Just like if you buy shares in BP, you don't go to BP's head office and have a look round, or you don't go and look at their drilling sites. It's an investment. You're buying it to make money. That's what buying London property is about. But if you can come, it's a great kind of time to come. And we always say to clients when they've bought, come to London when you complete and stay in it. But you don't have to. If you're buying off plan, you see a video, you can see the floor plans, you can even do the views. You know, Melvin's talking about big developers. They have fantastic software now. You stand on the balcony, on the video, it will show you from the balcony, the view this way, the view that way.
360 view, yeah.
These 360 views, but not just within the flat, it's of the view. And they show you the trees and they show you, it's amazing. So you choose your unit, and once you've chosen it, the legals are very easy. We work with lawyers everywhere, but we have a lawyer in Malaysia who can meet you locally, do your IDs locally. We can arrange your finance locally. We're in London, so you'd never have to come. If you do come, we welcome people to come, because of course you should come and see it. If you spent 500,000, £1 million, it's good to come, but you don't have to. And it's very simple. You know, the process is very easy to buy a property, an off-plan property. Second-hand is a little bit more time-consuming, but it's very simple. And as I said, we're there. You know, our job is, we're not just normal agents that want to just sell a property and leave you. We want to be there and hold your hand through the process. And that's why Melvin's based in KL, and we have someone in Dubai, and we have Hong Kong, and we have Shanghai, and we have Singapore. We have and India as well. We have overseas offices to help clients through the process and be there to make sure things don't go wrong, and to try and make it as easy as possible, because they don't come. So as I said, it's even now, you can sit in your lockdown room and you can reserve. We just need a credit card. And if anybody's interested, they can call me straight after the show, and I've got my credit card machine. But no, you don't have to do anything.
Of course, you do not have to worry. With IQI, we have many offices around the world as well. So if you need any help, we are there. We will be able to assist you as well, together with our local teams. All right. So any more questions before we end the program? So for those who likes to have the report, please like our program and comment report. I will get my team to contact you, and we will send you the reports. Any more questions before we end the program? Okay, for those that was joining us, thanks for logging in and listen to our program. I hope you like our program, because and you will be benefit from this as well, especially from two of our very experienced specialists in UK. So if you need any questions, please, if we will not be able to answer you, you can always leave a comment, okay? We will answer you subsequently, all right? So remember to join us every day, all right? 8 p.m. Malaysia time, GMT +8. So tomorrow we are going to talk about China market. So Mark or Melvin, you can join us as well if you want to listen to the China market, all right? So see how crazy. Yes, it's in English, don't worry.
I think just before we end, I'd just like to add that for us at Ben & Reeves, I think our first key is always to look at how to monetize the product or the asset for the landlord, in which we do the lettings, we do the furnishing, we make sure everything is in order, we take care and we represent them. So that's very important to us, to ensure that they are properly and legally represented. So whatever products that you know, if you have customers that might want to go through us, please bear this in mind, that whatever products that we recommend, we must be able to let out, number one, and monetize it for your client. Be it it's how many percent the commission is not an entire major issue for us. We don't look at it that way. We look at ensuring the client's interest is taken care of first, because if they make money, they will come back to us, and everyone makes money. I think that is a very important note that we do, because we do handle the lettings as well. So like Mark said, we can't push a property and then, you know, disappear. Most of the landlords we have handed over. We take their keys, we go in, we do the photography, we furnish it, we go personally to hang the curtains, set the beds, put in the toiletries. All these things are done, and if they want to come to London and check in, we put in a very nice welcome pack for them, tea, coffee, cookies. For most of our VIP customers, we do that to a certain extent, and make them feel at home. And once they leave, they just clean the linen, and we take the keys and we let it out for them, so that it becomes a very seamless and sort of a private banking experience for most, if not all, of our clients. Yeah. And that's our service methodology and our mantra all these years.
Great. And of course, we IQI will always select the good partners to work with, the associates. Okay, so we build trust together and we make sure that your investment is sound and safe. Okay, that is very important. That's where we design this online program, is to educate the public how to invest wisely. So we'll give you an expert advice and the fundamentals, rules and regulations before you considering in investing abroad. All right, so I hope you guys enjoy this sessions, okay? And we thank you very much, Melvin and Mac, for spending the time with us and sharing the insights of the UK potential. All right, so I hope to catch up with you guys again. So meanwhile, take care, everybody. Okay, stay safe. Bye-bye. Good night.
Bye. Good night.
Thank you. Bye.